Intro music and graphics. Hey everyone, and welcome back to the channel. Today, we're diving deep into a fascinating corner of the software world. The companies that specialize in what's called vertical market software, or VMS. Think of it as software built for super specific industries, like managing city permits or running a car repair shop. These companies are masters at acquiring other businesses, and we're going to break down three of the biggest players: Constellation Software, Vitec Software, and Topicus. On-screen text: vertical market software (VMS), software for niche industries. So, what makes these VMS companies so special? It all comes down to a powerful concept called an economic moat. Visual: a graphic of a castle with a moat around it. Imagine these VMS programs are like the lifeblood of a business. They're so deeply integrated into daily operations. Switching to something else is incredibly difficult, risky, and expensive. This means customers stick around, leading to super stable and predictable cash flow. Vitec Software, for example, reports that a huge 86% of its sales are recurring. That's reliability you can count on. Visual: a pie chart showing 86% recurring revenue for Vitec. Now, how do these companies grow so big? It's their serial acquirer playbook. They don't just buy companies, they empower them. Visual: a graphic illustrating a decentralized network with nodes. Instead of a top-down approach, they give a lot of freedom to the businesses they acquire. They offer support and share best practices, but the day-to-day operations largely stay the same. This decentralized model is key to how they source deals. They don't rely on expensive investment bankers. Instead, their own operational leaders, who actually understand these businesses, are out there finding opportunities. Visual: an animation showing people networking and making connections, leading to acquisitions. This off-market sourcing allows them to buy companies at better prices, which directly boosts their returns. Constellation Software, a pioneer of this model, aims to do 80 to 100 small acquisitions every year. That's a constant stream of growth. On-screen text: Constellation Software, CSU, the acquisition master. Let's start with Constellation Software, or CSU. They perfected the buy and hold strategy. Since 1995, they've built a massive portfolio by acquiring VMS companies with high customer retention. Visual: a timeline graphic showing Constellation's growth since 1995. Their criteria for buying are super strict. They want companies that are number 1 or 2 in their niche, have at least $5 million in revenue, and a large customer base. After acquiring, they focus on optimizing profitability, aiming for a 30% or higher profit margin. This relentless focus has led to incredible shareholder returns. Imagine investing in them early on. You could have seen your investment grow by nearly 36% annually. Visual: a graph showing impressive historical shareholder returns for Constellation. Constellation's cash flow is a powerhouse, growing significantly year after year. They're generating so much cash that they can fund their own acquisitions. Visual: a simple infographic showing rising cash flow figures for Constellation. The future for CSU? They're tackling a challenge. As they get bigger, finding enough small, high-quality companies to acquire becomes tougher. So, they're looking to boost organic growth by focusing on exciting areas like embedded finance and artificial intelligence. Visual: icons representing AI and financial transactions. On-screen text: Topicus TOI, European expansion and platform play. Next up, Topicus. Think of Topicus as Constellation's European expansion, built on a similar playbook but with a unique twist. They're not just buying VMS companies, they're building vertical market platforms, or VMPs. Visual: a diagram showing multiple VMS icons connecting to form a larger platform icon. What does that mean? They're integrating different acquired software solutions within the same industry to create more comprehensive offerings. This allows them to unlock new revenue streams, like transaction fees and data monetization, which helps drive solid organic growth, reaching 5% recently. Visual: a graph showing Topicus's revenue growth over recent years. Topicus is growing fast in Europe. While their financial forecasts are aggressive, there's a bit of complexity in how they're structured, which might make them seem undervalued to some investors. The key for Topicus is executing this platform strategy flawlessly across many different countries. Visual: a map of Europe with Topicus's acquisitions highlighted. On-screen text: Vitec Software, Vit, the resilient Nordic player. Finally, we have Vitec Software, a strong player in the Nordic and European regions. They also follow a buy-to-keep model, focusing on companies with similar values and culture for smooth integration. Visual: images representing the Nordic region. Vitec is known for its resilience. A huge 86% of their revenue is recurring, making them a very defensive investment. Visual: a graphic highlighting Vitec's high recurring revenue. While Vitec has a fantastic long-term track record, they've recently seen some slowdown and margin pressure due to broader economic conditions. This shows that even these stable businesses can be affected by the market. They prioritize stability and cultural fit, which might mean slightly lower capital allocation efficiency compared to Constellation, but it positions them as a steady, reliable consolidator. Visual: a comparison table showing key metrics for CSU, TOI, and Vit. So what's the takeaway? These three companies show us the power of specialized software, smart acquisitions, and decentralized operations. Constellation is the benchmark for capital allocation, always looking for ways to innovate. Topicus is the high-growth story, building platforms in Europe. And Vitec offers a more defensive, resilient option with a strong European presence. Visual: a split screen showing the logos of CSU, TOI, and Vit. Understanding these models can give you a great insight into how successful software businesses grow and create long-term value. Outro music and graphics.